Good evening, everybody. Well, the market has been pretty much the same characteristics that it's been in for the last few months over the last 3 or 4 days when I was kind of out of pocket. But as we can see, the Dow, after a big day on Thursday, pulled back on Friday. Today did a very indecisive trading, but it did stay up above the T-line, which is very important for kind of visually analyzing, if I can do this. Visually analyzing which way the market's going. And as we can see, we're still in this kind of wedge formation, pretty much going sideways. I already had to trape through the snow to get to the barn today. And the bad news was my handyman, Josh, who can do everything well, who was helping me build out the loft and my workbench area in the barn, had the audacity to go skiing in New Hampshire this past weekend, and then called and let me know he can't work for the next 3 months because he broke his hip while skiing. So there you are. Wayne, no, I don't have horses. I have cars. All right, and as we can see in the NASDAQ, still kind of just moving sideways. The transportation index, still trying to head back up to the top of the trend channel. All right, crude oil prices have not changed direction. They're still rolling over. Should probably make this flatter. And they have not been able to get up above the T-line, still in a downtrend. The dollar, still in an uptrend. Can't get back below the T-line, but notice how they've moved away from the T-line a little bit. Means on a short-term basis, there might be some backing and filling. And gold, oops, I don't know why that's so truncated. Gold has, notice what it did. Came out of this pattern very strong, pulled right back smack dab to the T-line today. Now watch for your J-hook pattern. And what else do we, let's see, we do silver. Silver just to kind of confirm what gold's doing. And notice the bobble that silver hit the 200, pulled back, hasn't closed below the T-line. Get ready for a J-hook breakout of this one. Interest rates, bond prices, staying up there pretty well. Still not doing anything where it's reaching the T-line. Tells us bond prices are heading up, yields are heading down. I haven't checked any of the soybeans, still in a slow downtrend, but looks like it's trying to bottom out. And whoops, CTEH. Cotton looks like it might have hit a bottom. Let's look a little bit better if we make it. There's your bullish engulfing signal. That might have a pop to it. And I'm trying to think, what else do we look at? Gold, silver, dollar. Yes, that was it. Liquid, cotton, yeah, you can get it in and out pretty easy. Oh, hogs, that's right. I knew there was something there that I was forgetting. The meats, Hogs bounced a little bit today, but didn't do anything and told you that this downtrend was over. And cattle, notice what cattle did today. Came right up to the T-line and then failed. Look for the doji sandwich to the downside on cattle. Notice the blue ice failure where it failed right here at the 50, went right back to the 200. And this is why I say watch to see what it does once it gets to these technical levels. In this case, it went right through, and right now it's still showing us still in a downtrend. That was live cattle, feeder cattle. Same scenario. Still in a downtrend. And we just did soybeans. Soybeans was kind of bottoming, but not anything I'd really want to trade right now. Just not a strong direction. All right, let's take a look at a few that we recommended. KPTI, because this is your classic reversal signals. Notice the signals down here. Whoops. Make this bigger. There's your doji. There's your hammer in the oversold area. Bullish confirmation. All it had to do was start trading up above the T-line today. It would be confirming the reversal signal and telling us the T-line is not acting as resistance. There's your first target. There's your gap to fill on the second target. 300-day moving average. Yeah, 300-day. 200-day moving average, your next target. We've been following DYAX. It had a nice little fry pan bottom breaking out with a doji sandwich, telling us that our next target more than likely is the top of this trend channel up here in this range. And bought some IS calls today because this is why the visual observations of candlesticks make the analysis so much easier to understand or see. They couldn't get back below the T-line. They had a lot of hammers to the downside and bouncing back up. So where's the next likely target if they start moving this up? You can draw a line right through the top of the trend channel. That tells us they could take this up into the $80 area, $80 area or $82 area, the top of this trend channel. I bought the February 73s for I think it was $4.30 with the anticipation that over the next week they could turn into maybe $11, $12 calls. SRNE was one that we shorted last week, but now it's turned around and getting ready to kind of be this slow curve to the upside. That's one to keep an eye on because if this next wave equals this wave, it means you've got about a target of 1650 on this one. Lots of good-looking charts, a lot of them in the oil area. The Halo was a very good-looking J-hook pattern setup. I wouldn't be afraid to be buying this one on positive trading tomorrow. Notice a little Morningstar type signal and notice the indecision right here at the T-line telling us that if the next wave starts out, it should be a good 6-point move to the upside. And LCI. This is what you want to look for as far as what happens coming out of what would be perceived as a fry pan bottom. You're looking for that enthusiasm to step in. And notice where this gap up occurred when you're pretty close to being up here in the overbought area, which is exactly where you're going to likely see a breakout of a fry pan bottom, which tells us there's probably a lot more upside to this one. Yeah, hold on to your individual stocks. We'll get to them when I tell Jim to do the double line. Let's see. Corn. Corn is really very unexciting right now. It's still in a slow downtrend, but not anything that I would be trading at this point. And ZIOP is a good-looking chart. Another J-hook pattern. If we came from the $5 range, went to the $10 or $9.50 area, that tells us this should take us up into about the $12 range. Notice the doji sandwich off the bullish Harami. I say notice this, is that if you, the more pieces of evidence that you can see that the bulls have taken control. We know that a bullish Harami tells us the selling has stopped. And where did that occur? Right smack dab on the T-line. Then we have a doji sandwich telling us they've moved in this direction. And what do we know about the doji sandwich? There's going to be more upside to a doji sandwich. Yes, we can probably expect less volume than normal. But remember, New York is where the trading goes on. Around the world is where the decisions are made. How come I can't read my own darn handwriting? Another one that's got a nice bottoming action right here at the 50. A wave 1, wave 2 going into wave 3. This is ZSPH. FOMX. Nice J-hook pattern. And this is where it becomes so easy to observe the obvious. The obvious was when they pulled back to the T-line area, in this case the 20. Every time they took it down, they took it back up. Every time they took it down, they were taking it back up. Then they started it back up, probably wave 3, the same magnitude as wave 1. RGLS is in a big fry pan bottom. This big fry pan bottom, and there is your slow curve over here. I wouldn't be afraid to be buying this one again because they didn't sell it off, and the enthusiasm is starting to come back in. I say the enthusiasm. You can see very slowly that the investor sentiment is building back up. And this would be a perfect place to buy because if it breaks out through this level, probably has a nice strong run after a big fry pan bottom setup. NDRM, nice J-hook pattern. This is basically telling us after this profit taking, looks like the profit taking might be over. I would be ready to buy this on positive trading tomorrow using the T-line as a stop. And TTPH, again, this is where the visual aspects of candlesticks gives you immediate confirmation of what's happening at important technical levels. A bullish engulfing signal right off the 50-day moving average, stochastics in the oversold area, and a close right on the T-line. Makes for a perfect entry strategy in the sense that if they open this positive tomorrow, that's confirming this signal as well as telling us the T-line's not acting as resistance, and they've already done a bullish signal telling us that they're going to support on the 50. So if this is wave 1, wave 3 should be another steady Eddie type move to the upside. Just again, a high probability trade setup that puts you in the right place at the right time. And PLNR, there's that little morning star type signal at the end of a downtrend. I would start looking to buy. I forget what was that last one. I could go back. Let's see. This was TTPH on this one. What's your stop? I wouldn't want to see it close back below the T-line. If it did, it tells me the downtrending channel is still the primary factor on this trend. VTAE, look at the kicker signal and the gap up. Pretty much tells me that if wave 1 started from wherever this is, 6, went to 22, that we could be starting from here, going to about the $26 area. I'm going to put a little star next to that one, mainly because notice the kicker signal and the gap up. Two very strong indications that the investor sentiment has come back into this one with great enthusiasm. Let's see. Look at the little scoop pattern on plug. You might start looking at that one again. VTAE. What is the volume on this one, Marty? And let's see. TPLM. This is where you observe the obvious. The fry pan bottom. Notice when they bobbled here at the 50. All right. Yeah, so if it's close to 200,000 and it was a what, a $10 stock, that's not going to be too bad. But notice what we did on this one today. We broke through this downtrending channel and the 50-day moving average, making our run. First of all, there's a gap to fill right up here. At least that puts you in the right direction at the right time. And MGI, little breakout. Want to be watching this one because if it trades positive and breaking through this whole resistance band, there's a gap to fill right up here so that you can logically say your next target is the 200-day moving average. Let's see, I did that one already. CNAT. CNAT, get ready for this one. A little Morningstar type signal closing right at the T-line. At least this one could pop back up to the 200 or the 50. Give me a good about a 30, maybe a 25% return. MIFI. Nice J-hook pattern. Remember, the J-hook pattern has strength to it because if the prerequisite for a J-hook is a strong bullish move, which means somebody wanted to get in here with great velocity. Then there's profit taking. When the profit taking's over, usually that great velocity of getting back into that position comes in very quickly. So if this was a quick move up 2.25 points or about 60%, you got that same magnitude possibility over here. We did SRNE. CLVS. I guess we can move this over here. Nice J-hook, bullish engulfing right on the T-line. Uh-oh. I had to sneeze. J-hook pattern, kind of your fry pan bottom. I'd look for more upside on this one. Kite, get a left-right combo down here. So this one is very easy. If it opens positive, it's confirming a left-right combo, and a left-right combo has a very, very high probability of trading positive. I mean, high probability. So when we quantified our trade setups, probably number one was the best friend with a doji followed by a gap up out of the oversold area. Number two is your left-right combo, that if they open positive after that, you've got an extremely high probability, and not only are you going to be in the right direction, but the magnitude of the move will be fairly strong. Yeah, I had to sneeze. That's probably from walking to the barn and all that heavy snow. AGEN. Looked like a bullish engulfing signal on the other charts. Another one that you get ready to buy on positive trading tomorrow. And BIND, that's a J-hook pattern in progress. I would suspect that at least your next target is up here at the 200-day moving average. Now, during when a trend is, the markets aren't really moving in any direction, It's these type of patterns that we want to look for, these fry pan bottom breakouts, because that fry pan bottom is usually going to result in a very strong price move, as we're seeing an AMPE coming out this other side. That's a good percentage move in a few days. So we want to keep an eye on those. This one I'm watching, and notice on LCI where this occurred, or this gap up occurred, coming out the other side. That usually means they're breaking it out. It's going to be a very strong price move. Coral, oh yeah, hold on. I'll see if I can find another left-right combo. But a left-right combo is a doji followed by a bullish engulfing signal. Scamp, another one that has kind of this slow fry pan bottom and staying above the T line. You can stay with this one. And VHC, there's that slow curve. This one, I would not be afraid to be buying on positive trading tomorrow, because if it breaks through this level, there's your next target. Big upside. And we saw that in Choi, or Chew. There's that big fry pan bottom. Notice what it did over here, kind of that whipsaw. But what was the after effects of the whipsaw? They're staying above the T line. This one, I definitely would not be afraid to be buying on positive trading tomorrow, because this is where that fry pan bottom starts whipsawing, telling you there's lots of activity. Can usually break this out pretty strong at that point. And we recommended TESM today based upon its fry pan bottom pattern, where it broke out Friday through the resistance level with a gap up. I would expect wave 3 to be in progress. Let me see who is going. I don't know. Okay. Well, Shazam, ever since we've fixed the second line, getting more spam. Also on the gap ups, which is what creates the enthusiasm. Notice where the gap up occurred. Right here at the breakout level after this slow curve, breaking out through this downtrending channel, breaking out through here. Notice what type of percentage move you had after that. So this is why gaps are very important, especially if you can identify the pattern and the signals prior to that. So that's why we always want to keep an eye on things that have big gap ups, like we saw in Netflix, coming out of this rounding bottom. And notice it's still in a very strong 45 degree after that gap up. So remember, a lot of people say, well, I'm going to wait for it to pull back before I jump into a gap up situation. That's probably the wrong thing to do, because that gap is usually the message. And that's exactly what I call it, is the message. When you see something like this, they gap it up, watch for the profit taking to be over, because this was the message to tell you something very strong is going to come into that next trend. Okay, that's about it, except we're still short. We still have some short positions in the portfolio. We're still short Herbalife, because it's never been able to get back up above the T line, still in a downtrend. And notice the stochastics right now. They're not telling you there's any buying going on in this one. True. Even though it's showing some bottoming action, still hasn't been able to get back up above the T line. So still going to stay short on this one until we see something that tells us the bulls are taking control. And this is another one where you always want to wait to see if they're going to close above the T line. We've been short VDSI, traded indecisively. Then on Friday, it had a big move to the upside, but notice where it ended up for the day, back below the T line. So that might have been a little bit scary at that point. But remember, what our basic analysis is, we need to see a candlestick buy signal and a close above the T line. The fact that they didn't close it still kept us in the probabilities we're in a downtrend. All right, so I put a couple stars again next to option traders. I think you might want to take a look at this one. I don't know how it got way over there. There's your fry pan bottom breakout, an LS or LCI, and VTAE. If it's only got a couple 100,000 shares trading at a $16 price, I mean, that's much more significant than a couple 100,000 shares trading in a $5 stock price. So that's still hefty. In my case, it's not a big concern, because if my minimum is a $5 stock trading more than 200,000 shares a day, that means that the dollar size that I was going to put in makes that the minimum. So the same dollar size, which is not going to be, is going to be less affected by a $16 stock trading about 200,000 shares a day, because I'm not going to go in with the same number of shares as I would on a $5 stock. Let's see, is VDSI considered a bearish scoop? Not a bearish scoop, because a scoop would have been a flat trading. This to me is just a bearish J-hook pattern, making still the 200-day year viable target. It doesn't matter that the 50-day moving average is there, because notice the 50-day moving average is just a target or a potential resistance level. However, look where we are with our stochastics. We're just coming out of the oversold area, and how are we coming out? With a strong signal like the kicker signal. So that tells me, we may run into a little bit of resistance there, but there's enough force in this signal and enough juice left in the stochastics to get us well up past that 50-day moving average. Okay, so with that, VTAE February, yeah, I would look at maybe if they have 17.5s or anywhere around the 17, 18. If Steve can turn the chart upside down, it's easier to see shorts potential and upcoming direction. Yep. All right, let's see if we have any questions general questions on candlesticks. Oh, we got the darn cat here. Always wanting her treats. When I see a gap up on a stock that has many gaps, a gappy stock, I tend to discount the importance of the best friend gap up signal. Yes, there's going to be stocks that do have lots of gaps, and those are usually ADRs, meaning they're traded overseas, so they're always going to have prices that open up differently here. So yes, the more gaps you see in a stock, the less important it is. So, but I would say 95% of all the stocks, probably 98% of all the stocks that you're going to look at, the gaps are going to be important. ISIS, is there a resistance around 75? There could be. I mean, that resistance level, but as we can see on the overall trend, it's in an uptrend, riding up on the T-line. And that observation is true all the way from back here at around the $40 range, and now we're trading at the $73 range. So as long as it stays up, more than likely, I would suspect the next strong move would be to the top of the trend channel. And notice where your stochastics are. It's not like they're running out of steam. They've just built up some more steam with the stochastics, telling you they can move up well past this resistance level. Oh, let's see. Yes, trading rules. for entry and exits. Okay, I will do that. I assume you stopped out of AMBA. No, the only reason I didn't stop out of AMBA was because I wasn't here the last couple of days. I probably would have yesterday, but I was, where was I yesterday or on Friday? I was driving from New Jersey back to Pennsylvania in kind of sloppy weather. So, so I'm still in AMBA, and I may have given it one more day, depending on what my mood was, just based on this trend channel. How do you define a scoop pattern? Yes, a scoop pattern, a J-hook pattern has a strong up move, then a pullback, and a strong up move. A scoop pattern usually has a very flat sideways pattern, and then the scoop, which comes out as a slingshot effect after that. But, oh, hold on, I goofed up on. Would you buy Nugget? I would buy Nugget on a positive trading and use the T line as my stop at this point. You exited BBSI. Railroad. Yes. You should have been out of this one. Probably on this day right here where it didn't open positive and trade positive. But now you look to get back in it. So if you got out at 20, whatever I want to say this is, 28.5, and you have to get back in at 29.70, it's because you're getting out when it looks like it's time to get out and getting back in when it's time to get back in. A slow curve and a fry pan bottom are basically visually the same. The slow curve is usually during an uptrend, and the fry pan bottom is usually at the bottom of a downtrend. Allison, that's probably true. Now, that's probably too much, what do I want to say, too much fundamental analysis, but the logic says that if things are starting to come back in the small pharmaceuticals, it's probably because it's a lot cheaper for them to go through all the research to come up with a product and then be bought out for a major company instead of them spending millions, if not billions of dollars to do the research. It's much easier to buy out a company that's already done the research and found something successful. That way you don't have the risk reward or the risk factor that you're going to spend millions and millions of dollars and it doesn't turn out well. I have bought twice. Let's see. Should I get back in? No, right now it's not a good chart to get back in because you're in the overbought area. You've probably got more upside. This would have been a good place to get back in. Now you've already, well, I guess it's not that big a percentage move, but you're near the top of the trend channel. Your risk-reward factor at this point is not good because you're running out of steam in your stochastics. You're near the top end of the trend channel. It's already had a move. There's better places to have your money right now. Netflix, you just have to observe the obvious. Right now, they are up above the 3T line, let alone the T line. But you're in the overbought area, At this point, I would set my stop at today's open. If it came back down through there, that would be showing that this profit taking is now coming in with some strength. In your last seminar on Saturday, you said patterns in an overbought stochastics, while reversal signals is that oversold stochastics. Correct. A lot of times you're going to see a pattern break out when your stochastics are already up here in the overbought condition. Whereas you want to find your reversal signals when your stochastics are in the oversold area. Okay, we'll get to the individual left-right combo. Let's see if I can find a left-right combo. Let's see, left-right combo. Oh, I think it was kite. Left-right combo is a bullish engulfing signal after a doji type day. Now this is more of a spinning top. Somebody asked me today, why was I making spinning tops and dojis one and the same? Because a spinning top is basically a doji, just with a little bit less, I want to say, less concentration of opening and closing right at the same level. But it still represents indecision between the bulls and the bears. Could you say a few words about the 3T line? The 3T line works effectively. The further away you get, remember, the further away we get from the T line, the more the 3T line becomes a viable indicator. So if I'm in something where I can see the 3T lines holding and now I'm gotten away from the T line, then I want to be ready to be much more conscious where to set a stop, in this case, back where on this previous open. Because if it came down through there that far away from the T line, well above the 3T line, that tells me they're probably coming back to the T line. You did a webinar on Saturday. Oh, it had to have been not this Saturday because I was traveling. Or did I? I can't even remember. No, it was last Saturday on the 17th. BBSI had 83 volume today. Probably more than likely is because a lot of the stocks out there had low volume just because the people were away from the market because of the storm. It might be a low volume, but at a $30 stock, I'm a little bit more flexible on the volume, as long as the volume isn't 36,000 or something, where you'd have a hard time getting in and out of the trade. Basically, the volume should be a function of if you're buying 5,000 shares, or let's do it another way. If you're buying, let's say 30,000 shares per position, well, that would mean that if you were buying a $5 stock, you're buying 6,000 shares. So if you're buying a $5 stock that only trades 130,000, your 6,000 shares is a significant percentage. Whereas if you're buying $30,000 of a $30 stock that only trades 120,000 shares, you're only buying 1,000 shares on that 120,000 share volume. That's probably not going to be a real major factor as far as moving the price around or liquidity getting in and out. Would you hold Apple through earnings? Somebody today said they had some big profits in the, I think they said the 100s. What should they do with earnings coming out? My suggestion is, if you've got profits, you take the profits. And then, if you think there's more upside, you buy, let's say, the 115s at a much lower price, which would make it that if the earnings fizzled, all right, you had less money exposed, but if it still had more upside, at least you're still making more money with the 115s. Oh yes, the World Cup Advisor, Tom. Yes, we've got our account set up there, and they do put on trades based upon the formulas that we have set up for when to buy and when to sell. So it's all done pretty much mechanically, so you've taken the emotions out of the trade. So everything's set up mechanically that we're buying, but we're buying the bigger volume trades such as currencies. Oh, I should be on crude oil, the S&P E-minis, things like that have big volume to it. But it's all done on a mechanical basis that once the formula kicks in, they go ahead and execute the order, and then we put our same mechanics on when to be out of that trade. When the trade that looked like it should be working comes back and negates that trade, we close it right out. Again, taking all the emotions out of the trading decisions. You consider divergences when comparing, for example, the stochastic peaks and the price peaks? No. Remember, stochastics are a function of what the price is doing right now, which has nothing to do with a previous price or a future price. It's just showing you on the price right now in this current trend, whether it's overbought or oversold. Has nothing to do with the next move to the upside, which might, and again, it's a formula for the high, low, open, and close. So you might have prices moving much higher, but they're doing it in a slower manner, which means your stochastics won't be in the overbought area at the next reversal. So no, stochastics have nothing to do with the divergence of price movements. PCAR, a left-right combo. Almost. It doesn't look like it was quite a bullish engulfing signal over here, but it does still look like a nice chart with a little morning star signal. But if this was a left-right combo, this would have been a bullish engulfing signal. Let's see. Would you buy Mankind? Yes, on positive trading, but with a little bit more, well, with the realization, and notice what they did to break out. They actually gapped up today and went through that level. So that tells me there's probably, everybody could see there was a resistance level right here, but they were buying with great aggressiveness right through that level. Let's see, do you use the 2T line more in day trading, such as futures market, or can you talk about your futures trading a bit? Not too much to talk about on the futures side, other than I use the same charts as I would on stock charts. For example, I'm still short crude oil, and if you flip to your 10-minute chart, you can see what the 10-minute chart did today. Came up, did a big bearish engulfing signal, then was a good trade to the downside all day long. Usually after hours, it doesn't really do all that much, but as you can see, it's not moving very far away from the T-line, so there's no great enthusiasm coming into it yet. What are your general thoughts about the ADRs? Yes. My thoughts are I don't trade ADRs because we've got 78 or 8,700 trading entities that you can look at very clearly without having to worry about what the gapping is doing. So on an ADR, if it was something I had to buy or sell, I'd use the simple rule of still using the candlestick signal and staying in it as long as it doesn't trade back below the T line. But as far as trading an ADR, I usually don't, because there's too many other charts out here that you can, you've got a ton of supply of stocks that don't need to be analyzed with any confusion in it. What the most useful ideas for writing a scan? A specific reversal signal or a price crossing T line? Writing a scan is easy. Finding the best idea is harder. Rob, it's very simple, or it's been very simple for me. First of all, I want to find the best, or I want to find the signal. My signal is my first criteria. My second criteria is where is that signal occurring? Is it in the oversold area? Then I start adding criterias, and as you can see on these charts, there aren't that many, usually the T-line and the other moving averages. So my very basic scan is I'm looking for stocks that have produced a signal in the oversold conditions, stochastics below 20, and I just scan for them the next day by looking for which ones of those stocks had the biggest percent price move. And usually that biggest percent price move with stochastics in the oversold area, probably in the first 10, 12, 15 stocks, I'm going to find 4 or 5 reversal signals for candlesticks, and those become my first line of potential trades for the next day. All right, our thoughts on today's doji and March crude. What do I have up here? March crude. Right now on the March crude, I did a doji, but notice the type of thing that it did here at the T-line, that slow curve. I would look as much for more downside, and look where our stochastics are. They're not in the oversold condition anymore. I would think that we're still heading down. Now, if this all of a sudden picked up strength, and especially came back up through the high of today's doji, yeah, I'd close it out. That would tell me exactly what happened down here. And Rob, if you need help with writing scans, Ed C is probably a very good person to get with here in the chat room. As far as writing any type of scan, or his scans is already written. Where can we get a list of most active stocks in the pre-market? Sam, I don't know the answer to that. Marty may have. Yeah, Marty, a PCAR is sometimes, it all depends on each individual service's feed. And that's where the inaccuracies come from different software to different software. Today, Netflix could have opened at one price in one scale or one software feed, and open at another price in another software feed. So you're going to quite often, not quite often, but not rarely, we have where the signals look a little bit different on one chart versus another. Right now, the SPY and the Russell 2000 pretty much the same as the NASDAQ, at least on the Russell 2000. You're in a slow uptrend as long as it stays above the T-line. Do you need real-time price for trading or delayed? Jose, it depends on how fast you trade. If you're day trading, obviously you want a live feed. If you're a swing trader, the end of the day is fine. Yes, there's Ed C. Yeah, if you need any scans, Ed is the person to get with. All right, Jim, let's go ahead and do the double line. And let's go ahead and do the second double line. All right. Let's see where we are here. Okay. FEYE. you stay long on this. You've still got this fry pan bottom, good strength in it. You just stay long until you see a sell signal. DL, yeah, I would set my stop now at the 50, because if it closed back below the 50, that means it's going to come back and test the T-line or do a bobble at this level. And OUTR, these I hate to get into until they show that all the selling is over with, and that you won't know until it gets back up above the T-line. Con, nothing there yet. I wouldn't be, right now, it wouldn't be long or short. Just not enough direction in it. Maxwell, yes, stay short Maxwell, but you see that you have the doji right on the T-line. And we know the very simple rule of a doji. It's going to move in the direction of how they open it after the doji. So if they open this positive, I'd close out the short position immediately. CSTM is a little bit soggy today. Right here on the T-line. So this one has to open positive. Otherwise, it's more than likely coming back to test the 50-day moving average, which isn't unusual. Coming up through a resistance level, they come back and see whether that resistance level is going to now act as a support level. And DDD, nothing here. That's just sideways. That wouldn't be long or short. Telephone, that one you can be going short, just not a very enthusiastic price move or price movement on this one. Hawaiian Air, you just stay long as this stays above the T-line. At this point, at this point, I'd still be putting my stop at today's open. It shouldn't come back below that level. And JetBlue, well, shazabuzz. Let's see, shazabuzz. JetBlue, very simple. It needs to open positive and trade positive tomorrow to stay in it. If it opens lower, it means they're probably coming back to test the T-line. Delta, same scenario. Double doji setup. If it opens lower, it's coming back to test the T-line. It needs to open positive and break out into new territory off the double doji. BABA also needs to trade positive, or it will still be stuck in this downward trend channel. ARWR did a little bullish engulfing signal right on the 50. This one you can buy on positive trading, telling you that the 50 is acting as support, doing a double bottom at that level, and doing a buy signal with a bullish engulfing signal. ONTY, little kicker type gap up, not a pure kicker because usually a kicker will not have a tail to the downside after it opens. However, it's still got the same implication that there's very strong buying sentiment coming in. This one I wouldn't be afraid to buy on positive trading. Which one? ENVA. Did I do something wrong here? ENVA. Ruh-roh. Candleman Doji, that might be a lap. VIPs, stay long on this one, especially if it opens positive on a Doji sandwich breakout. And CRIS, another Doji sandwich breakout, telling you this level right here wasn't acting as resistance, neither was the 200. You stay long on this until you see a sell signal. The VIX, VIX stays short, especially if it opens lower tomorrow. And EWG. EWG looks like it's broken out of this downward trend channel with a little doji gap up. I would at least look for the 200-day moving average to be the next target. CDE. This one, all you can do is stay long until you see a sell signal and the close below the T-line, which it hasn't done. Office Depot had a good-looking chart today. This one you can get ready to buy. There's kind of your left-right combo almost, but it's a doji followed by a bullish candle closing above the T-line. Still makes it a good chart. And MTOR. Nothing here that I'd get real excited about. It looks more like it's moving sideways, waiting for the 50-day moving average to catch up. EXAS. Same scenario. Nothing to get real excited about until it breaks out through this wedge formation to the upside. Home Depot. Just stay long. Home Depot doesn't have the magnitude of move to make it real exciting, but as long as it stays above the T-line, you're going to be in an uptrend. And Facebook also has been in a sideways mode. Right now, it'd be a hard one to trade because of the lack of magnitude in the price movement potential, as well as really a lack of direction. So in short, I'd probably be trading something else right now. See if I can do this. S.IACA. Ron, that one's not coming up. Dix, nice J-hook pattern. You can be buying this one. CRUS. Another slow curve breakout to the upside. Stay long until you see a sell signal. And XLE. Another one that's just now breaking this little downtrending channel. Stay long with the anticipation there's going to be some resistance up here at the 50-day moving average. Let's see, CSTM needs to open positive tomorrow and stay up above the T-line. BDSI. This one's got a good little double rounding bottom. I wouldn't be afraid to be buying this one if it opens positive up above the 50-day moving average. And Scotty. Yeah, you can be buying this one. You just have a lot of junk to get through, like the 50-day moving average. You can be buying this one. Just be aware of what it does once it gets to the 50. And glue. Glue, another one you can be buying off the double bottom. Just be aware of what it does once it gets to the 50. Post Properties. Still in a nice uptrend. Big breakout today. Stay long, but at this point I would use the halfway point of today's candle as my stop. If it came back down through there, somebody's taking a lot of profit taking. And LAYN, this one can be bought after the little miniature belt hold signal today. If this opens positive, that tells you the bears are out of the way. Caterpillar. Nothing here to get excited about. Probably wouldn't be long or short Caterpillar right now. Just nothing there. And Halliburton. I'd be more apt to buy at the 41.80 level, knowing that it came up through the 50-day moving average, which it's moving in that direction on a nice bottoming action. Line. Another one that you can be buying with the anticipation the next target is the 50-day moving average after today's bullish confirmation through the T-line. AUO. That's traded overseas quite a bit. Notice how choppy it is. Except you do have kind of a J-hook pattern. You can stay long on this as long as it doesn't close back below the T-line. And RGR, this one you could be buying on positive trading. Notice how the big rounding bottom hasn't been able to close back below the T-line at all. And ZGNX, maybe I've made these charts too small. Let's see what, maybe I made them too big. Morningstar signal, you can be buying this one on positive trading after the little Morningstar signal. Just be conscious of what it does once it gets back up to the resistance level, which would be right here. And you wouldn't want to see it close back below the T-line. Front row. EROC, slow curve. You can be buying this one. Also very conscious of what it does once it gets to the 50 to see if it fails at that level. Siri, you stay long until you see a sell signal trying to break out into new territory. And Simo, another one where after the big, this is what you kind of like call a columns reversal, big down day, choppy, big up day. You're still in an uptrend until you see a sell signal and a close back below the T-line. Tazar, just stay long on this one. ADHD. This one you get ready to buy on a positive open tomorrow because that would set up, that's a nice looking chart, set up your J-hook pattern. And if they break out through this level, which is this level, your next gap to fill is right up here at the 200-day moving average. JC Penney, whoops. Little J-hook pattern. You can be buying this one with the next target at the 200. SSTK. Another one that can be bought based upon the buy signals and a close back up above the T-line, somewhat along the same lines as our KPTI today. Front row. With a nice signal and then trading up above the T-line. AGIO. In this uptrending channel, you just stay with it as long as it doesn't close back below the T-line. An ERF. Nice little fry pan bottom. This one you anticipate they're going to come back up to the 50. So if you're buying this one, you don't want to see it close back below the T-line at all. And this BlackBerry. BlackBerry, I wouldn't be long or short. This has a chart that I wouldn't even want to touch. You can't. There's no direction to it. We did Scotty. Wow. Scotty, you can be buying. It's just there's no major direction to it right now on this one either. AKAM. Let's make these bigger again. That came right up off the 50. It has to open positive. Notice already today it used the T-line as support, which is usually a good indication. But stay long, but watch to see what it does once it gets to the 50. And EXJ did a little gap up through the 50. Now look for the 200 to be your next target. Go. Big breakout after a Morningstar signal. This should probably take you back up to test the 200, which is the recent resistance level. And CLDX. Notice the big left-right. There's a left-right combo, kind of a doji inverted hammer, big bullish engulfing, and then they gapped it up into the breakout area. Just stay long until you see a sell signal. And SIL. This one you can stay short. Whoop, no, you can't. This one you can buy on positive trading as long as it doesn't close back below the T-line. And DGXJ, same scenario. but it has to open positive. If it opens lower and starts trading down, you can short it. It's coming back to the 50. Not just a starting point. It's a great resource. Okay. I don't know what that means. All right, Apple. You stay long until you see a sell signal, but with the earnings coming out, yeah, you have to see how they take it right into the close tomorrow, because remember, they're usually, the smart money is usually going to know what to do right before the earnings. Is that V or XIV? Apparently it is. You stay long on this one. We did FEYE. Mylan. You can stay long on this one. It's just not going to be very exciting because it's an institutional type trader. Appy, another one where you just stay long as the volume is good, as long as it doesn't close back below the T line. All right, just a few more. Beeve. Slow curve. You could get ready to buy this one on positive trading with the anticipation that if it breaks out through here, it's going to go up at least to the 50. Ford Motor Company. It's getting to the end of the wedge. I'd rather pay for it up here at 15.40 if it breaks out to the upside. HANT doesn't seem to be working. HIMX. That one broke out on a nice doji sandwich. That's in new territory, should be moving higher with that doji sandwich. Ross Stores, just stay long. This will probably have another steady eddy. It won't be very exciting, but it will be a slow, steady eddy to the upside. ACHN, another one where you stay long as it doesn't close back below the T line. INFN broke out nicely today, or yesterday. You stay long as it doesn't close back below probably the low of Friday. You should be in a 45-degree from here. And Herb came back up. Notice how it used the 20 and also did a kind of a tweezer bottom. You can be buying this one. Just make sure your volume's all right. But you can buy this one on positive trading tomorrow. HABT. There's your left-right combo Morningstar type signal. This one, I'd put a buy stop above the 20, which was the high of today. If it came up through there, it's breaking this downward trend channel. And MVIS. MVIS, you buy in positive trading because that would tell you the J-hook pattern is in progress. BCRX. You buy this on positive trading, a doji sandwich breakout above the T line. And Taylor, there's a left-right combo that went up through the T line. You can buy this on positive trading. Just be conscious of cognizant of what it does at the 50-day moving average. Go. Look for some more upside. Just watch what it does at the T line. Whoops. And RGLS. Slow curve. Be ready to buy this one on positive trading. And AGN we did kind of a J-hook pattern. Be ready to buy this on positive trading. Denny's. Denny's, just stay long. Micron. Whoops. Micron. You can buy this on positive trading. Just make sure it gets up through the 200. CMTL. Looks like it have a failure. You're probably in a bobble. If it opens lower, you close out the position. You see what it does once it gets back to the T-line, and then you can buy it if it comes back up through the 50. STX, be ready to short this if it opens lower tomorrow, telling you that it's moving in the direction of how they open it, which means that the 200 would not be acting as support. SCO, stay long. Where can we find the cookbook recipe for day trading using 10-minute, 5-minute? I think our entry and exit strategy, I think it's called the Triple T trading, has a lot about the 5-minute, 10-minute, and the 8, or the T-line and the 3T line. And CSIQ, nothing there yet. I probably wouldn't be short, but I probably wouldn't be going long until you see a strong buy signal. Are we going to have a bad day Wednesday, 28th of January? No, I don't think so. I don't have any reason to think it's going to be any better or worse than any other day. I was referring to the scan setup guide. Oops, I don't know what the first part of the question was. G-Pro. G-Pro, having a hard time getting up through the T-line. If I was going to buy this, I'd have a buy stop above today's open. Let's see. I don't think I skipped over AKAM. Yeah, this one, if it opens positive, you can be buying it because it's already used today's T-line as your support, but just be aware of what it does once it gets to the 50-day moving average. Vail, stay short at this point. That hanging man gap down through the T-line told you they're trying to get out of this one with great enthusiasm, which means there's more downside. And CLF got whacked the other day. Stay short on this one until you see a buy signal or close back below the T-line. We did Gale, all right. Okay. All right, tomorrow, definitely want to see it open positive. So the pre-market futures will tell us what they're going to do. Open it lower. That tells us they're still in this wedge formation, just moving sideways. Oh, Marty, it must be because I rebooted as soon as I got back from New York this past weekend. So looks like they're running fresh right now. GERD, yes, I think what is this? This is the last week of, I'm pretty sure in the first week of November, maybe, February, they're going to be having that all available. This sideways movement of the market, normal full January, no, not necessarily. Yeah, sometimes you have a strong, usually the first, the first 5 days of January tell you what the rest of the week or the rest of the month is going to do. That's usual. I'd rather let the charts tell me what it's doing. Okay, everybody, have a good evening. I'm sure you'll all be at the computer screens tomorrow because in the Northeast, you're probably not going to want to go outside anyways. All right, have a good evening. We'll see you bright and early in the chat room.